to the Impact Podcast today. Yes, this is another life that we are going to be teaching, and I believe you are ready to learn the top Forex mistakes to avoid, even if you are a beginner or advanced or experienced trader. So this is what we are going to be looking at tonight, and I want you to get your pen, get your notebook ready, because I'm ready to share 5 Forex trading mistakes that you need to avoid. If you are new to the Forex market, yes, these mistakes are going to help you to break through in the Forex market. And today, I want to welcome you once again, like I said, to the Impact Podcast with Taiwo Balogun. And if today is your first time of coming across this channel, yes, I am Taiwo Balogun, and I have been a business owner, an investor, and a financial market strategist for over 2 decades. So I think I am qualified to teach Forex. I am very, very qualified to teach Forex, because what I will be teaching you today are things from practical experience of over 2 decades. And like I told you, I will be sharing with you 5 Forex trading mistakes that you need to avoid. And these mistakes are very, very expensive. They are costly, that you must avoid them. So let me also appreciate everyone that celebrated me on my birthday. My birthday was 18th of September. It was awesome having you guys around. All those that wish me happy birthday, I appreciate you. And those that also, destroy my bank account with cash, I want to celebrate you. Thank you so much. I love you from the depth of my heart, and I want to pray that God will continue to bless you in the name of Jesus. Yes, so let's get down to the business of today. The business of today is looking at 5 Forex trading mistakes that you must avoid. Yes, and like I said, even if you are a beginner or an experienced trader, you're going to learn something from tonight's masterclass. I want to call it masterclass because I will be teaching you what took me years to learn. So let's get down to the business as I share my slide with you. Like I told you, it's a bundle of experiences that I compiled together that I'll be using to teach you tonight. And like I said, we are looking at 5 mistakes. Yes, 5 Forex mistakes to avoid as you journey through Forex trading. And if you have your question, please get your questions ready, because I'll be answering some questions at towards the end of this program. And do not miss every bit of this session. Please do not miss every bit of this live training or live masterclass, because they are full of resources that are going to help you. And like I told you, I have been in the Forex market for over 20 years, over 2 decades. And what I will be sharing with you tonight are from practical experience. So if I tell you something, please take note of it. You also need to go and do your own research anyway. And before we get started, let me quickly tell you, share the disclaimer with you. This is the disclaimer. Let me hide my camera so that you can see it very well. Okay, so now this is the disclaimer that the content of this video is for educational and informational purposes only. So it is not intended as financial advice, nor should it be relied upon as such. Why? Because trading in financial markets, including stocks, Forex, and cryptocurrencies, carries significant risk and may not be suitable for all investors. So you can lose your hard-earned money. So please do your due diligence and make sure you want to part with the money that you can lose, the money that you know you can lose. So as we get down into today's masterclass, like I told you, do your due diligence so that you know what you're doing before you part with your money. So like I said, 5 Forex trading mistakes to avoid. The first thing that I'd like to share with you today is the beauty of Forex trading. Let us look at the beauty of Forex trading first. Now, looking at the beauty of Forex trading, number one is that Forex trading is traded 24 hours, 5 days in a week. It is what? It is traded 24 hours, 5 days in a week, meaning that the Forex market is opened 24 hours a day, 5 days in a week, and that allows for flexible trading schedules, meaning you can trade at your own schedules. You understand? You can trade at your own time. Whenever you feel like trading, within Monday to Friday, you can trade. And trading 24 hours, 5 days does not mean that you should see Forex as do or die affair. Forex trading is not a do or die affair. You have the liberty to do whatever you want to do with your time. You can be working and trading. You can be running your own business and doing Forex as side hustle. You understand? So one of the reasons why I am putting this program together, or this Forex trading program together, or session, is that it is one based on popular demand. A lot of people have been contacting me about, oh, my son, my daughter is into Forex. I need you to mentor them. I need you to do this and do that. But I realized that a lot of them are losing money. And meanwhile, a lot of people don't have the right background or foundation before they venture into Forex. We also had that similar experience. When we first started Forex trading, we were not told about the losing part of Forex. We were told about how you can make money. So we went into the market with the wrong mindset. And that is one of the essence of putting this together, so that you will have the right mindset and avoid some mistakes as a beginner or an experienced trader. So first thing about the beauty of Forex trading is that it is traded for 24 hours, 5 days, and it is also liquidity. It has Forex trading is highly liquid. It is highly liquid. The liquidity is high. And when we say liquidity, we mean that Forex trading can be executed quickly and easily because of the liquidity in the market. The market is over $3 trillion that is being traded on a daily basis, so they cannot afford to toy with your trading, except you are trading with some brokers who are doing shady deals. There are some brokers, this industry, the Forex trading industry, is a game for the mafias. In my own belief, I believe that Forex trading is spiritual in nature, because you are dealing with some mafias. Don't worry, don't be afraid, we'll get there. So Forex is highly liquid, and that means it can easily be executed. It can, quickly be executed as long as you have fine, stable internet connection. And the other beauty about Forex trading is that you can start with low capital. You can do what? You can start with low capital. Please let me know where you are joining this live session from. Just type where you are joining us from in the comment section. Let us engage. I can see hello, Coil 254. I don't know your name, but please let me know where you are connected from. So now, the number 3 beauty of Forex trading is that you can start Forex trading with relatively small amount of money. You can start with small amount of money. In fact, in Nigeria now, there are some brokers that allows you to trade in Naira. That means you can trade as low as 10,000 Naira, 20,000 Naira. In our own case, the minimum then was, and when we started, I think it was $200 or so. We don't have, in fact, there are some brokers, they will tell you minimum is $200, minimum is $500. Some brokers, their minimum was $1,000. But the more people jump into the market, we had a lot of brokers who now simplify the whole thing. And that was how we now have brokers that even allow trading in Naira, allow you trading with $5. You can trade as minimum as low as $5, $10. Some brokers will tell you $50 minimum. But however, do not trade with the money that you cannot lose. I need to say this. I need to tell you this. You don't trade with the money. Do not borrow money. Do not go to the bank to loan to trade Forex. Do not start by collecting money from people to trade for them, because you don't know what you're going into. You don't know what you're going into, and you cannot just say, oh, now I have a stable system because I know. See, we have been in this game for over 20 years. Yes, over 2 decades. I know the game, everything in the Forex market. I know everything. When I tell you, whenever I drop anything about Forex, it is 100. Just take it. It is 100. I know what I'm saying, because there are some things that a lot of traders don't know that are happening inside, that are happening in the Forex market. So you need to listen to this, to watch this program to the end, or this session to the end. Please watch it to the end. And if you have any question, drop your question in the comment section. I have 3 screens on my on my desk, and I can see everything. I can see all your comments, and I will respond to your question. Okay, you're watching from Kenya. Thank you, our viewer from Kenya. So now let's quickly run through, because we have a lot to cover. We have a lot to cover today. Now, looking at this, we also need to understand risk, the risk of uninformed trading. The risk of uninformed trading. What do I mean by uninformed trading? Uninformed trading is a trading that you do without doing your due diligence. You don't understand what is happening in the market. You don't understand how the market behave, because there's what we call market behavioral session. There's a session, there are always sessions that you see the market to be volatile. You see the market, there are times that the market will be low in volatility. There are times that there is going to be a lot of volume in the market. There are times that the volume will be high. There are times that the volume will be low. So if you don't understand how the market works, or how volume works in the market, you can be trading at the wrong time. You can be trading when you are not supposed to be trading, because there are 3 types of trading. You can buy, sell, or hold, or stay out of the market. Hold, we mean stay out of the market. You can buy when the market is going up or about to go up, and you do your due diligence. You are informed about what is happening presently in the market. Then you can decide to buy. When the market is set for downward movement, you can decide to sell. But when you don't understand, you are not informed about all these things I'm saying, you can blow your account. You can blow your account. Trading without proper knowledge can lead to losing your entire account. And when I say entire account, I mean your entire money, the money that you've invested in the Forex market. You get it? So I have people that have lost $300,000 before. I have people that have lost. I know people that have lost $1 million, $10 million. Yes, a friend called me sometimes ago and told me about his friend who lost $10 million trading Forex. See, people are losing, but people are also making money from this market. So I am not a trainer or a coach or a mentor that will tell you about the making money aspect of Forex trading and will not tell you the risk involved. You understand? So, at a point, Forex was overhyped and people were uninformed about how this market works. And this is also one of the reasons why I deem it fit to put this session out there, because I realized that a lot of people need to understand this. Okay, today I watched a video. When I saw the thumbnail on YouTube, the guy claimed that he made 1,000 something trading Forex in a day or something. And I watched it. And by the time I watched it, he couldn't even tell us a lot. He didn't tell us much about it. He was just telling us about how a guy showed him how he was trading and he gave him signal and, promoting another person's product. And yeah, there's nothing wrong in promoting another person's product. But I look at the video. It was 5 minutes video. And I was like, so you want to tell me you made this amount of money within this and you want to teach us in 5 minutes? It is not possible. You see, the Forex market is so hyped, so complicated that if you don't understand it, if you are not informed, you will blow your account. And if you are not informed about Forex trading, it has emotional toll. You understand? It can drain you emotionally if care is not taken. I'm talking from experience. And I used to tell people, if you have high BP, high blood pressure, don't trade Forex. I'm talking from experience. If your health is not stable, you are not stable health-wise, please don't trade Forex. Because Forex trading, like I used to tell people, it is not for everybody. It is not for everybody. It is meant for those that can take the risk, for those that have that mind of risk taking. And if you cannot take high risk, you can be risk averse and also trade Forex. Yes, you can be risk averse and trade Forex. One of the reasons why I used to tell people to be risk averse is that the emotion that is attached to Forex trading is high, in the sense that because it involves money, you are trading with money, except you are not trading real account. If you are trading with your real money, there will be emotions that will be attached to it, because there's something about money, especially when the money you are trading with, huge amount of money, your mind will always be there, and you want to be watching, and that can lead to significant stress and anxiety. So to avoid that, you need to be informed. You need proper education. Education, Forex trading education is continuous. It's not something that you start and you learn today and you think you have known it all. No. Even the fact that I have been in this game for over 20 years, I am still learning. I learn on a daily basis. At times I see people asking me, are you still trading Forex? I will just laugh. I don't need to make noise. I don't need to tell people that this is what I do. Yeah. I don't need to come out and be boasting that I make so amount of money, showing you chart and showing you account balance. That is not what makes you a successful trader. So the emotional stress that is attached to Forex trading is high. So if you have health-related issues, please, it is either you reduce your risk trading Forex or you excuse yourself from trading Forex. Another thing that another risk of uninformed trading is that it leads to poor decision making. It leads to what? Poor decision making, because lack of knowledge will make you to be trading impulsively. You understand? You will make irrational trading decisions that by the time you leave the trade cannot be going in the direction that you just left. You just be, at times you just be getting annoyed about yourself, and it can lead to something else. I've seen situations that I will place a trade maybe because I trade higher lots, and lot size mean the volume of the currency I'm using to trade. You understand? Or that I'm trading. So by the time, because I've taken higher risk, and by the time I look at it, don't let me lose much, let me close this trade. By the time I close, the market will now go in the direction that I just closed. So that can lead to a lot of irrational trading that you want to be jumping in and jumping out, fighting the market, and that is not the best way to trade. So You understand that the risk of uninformed trading can lead to account blowout. It can lead to emotional toll. It can also lead to poor decision making. So let's look at the mistakes that you must avoid in the Forex market. If you want to trade the Forex market successfully, be it a beginner, be it an experienced trader, you must avoid overtrading. What do I mean by overtrading? Overtrading is something that you are trading multiple times in a day or in a week. You understand? Or at per session, because we have different trading sessions. Overtrading is something that can easily, that a lot of traders are using to kill their trading account. You understand? Overtrading is a big problem. It has become a big problem to a lot of traders that they don't know how to get out of it. It is not compulsory you trade on a daily basis. Yes, there are some people, they don't even have the time. They just place trade once they've done their analysis. They just place trade and leave it for weeks. Some leave it for 1 week. They place trade on Monday. They check it on Wednesday and on Friday. Anywhere, and they can say, oh, I'm closing this week. Or, oh, this thing is still going to go up next week. Or it's still going to come down next week. I'm leaving this trade till next week. And you can keep trading like that. So trading that way will remove this it will help you from over trading the Forex market. You understand? So please, like I told you, let me know where you are watching from, where you are connected from, and also if you have your question, get your question ready so that I can answer your question at the end of this session. Now, we are just looking at the number one mistake that you must avoid is overtrading. And in avoiding overtrading, you must recognize the problem. Overtrading is like a kid. It's like being a kid in a candy store. You know, when you take a kid to a candy store, they will be trying to catch every market move. They will see this one. They want to catch, they want to take the candy. They want this candy. They want this candy. They want to take everything. That's how overtrading is. Trying to catch every market move. Some people are scalpers. We call them scalpers. Who are scalpers? Scalpers are traders that trade short term, very short period of a time. Pum, pum, they take profit, pam, pam, pam. They take also short profit or little profit and they are out of the market. And some people are good at that they can trade 10 times in a day. Some can trade 20 trades in a day. But it is not advisable for a beginner. Even if you are an experienced trader, there are times that you know that is a game of losing and making profit. You lose and you can lose more than the winning trades. So, but for a beginner, you must not start trading that way. Don't overtrade. Don't trade multiple trades per day. Don't enter multiple trades per day. You understand? You are not to catch every market move. That is why I'm telling you, you have to be informed. And the number two thing about overtrading is if you don't set daily limit, if you don't set your daily limit that, oh, this is the number of trades that I want to trade today, and or the capital that I can risk or that I want to risk today, you will overtrade. So immediately you want to trade on a weekly basis or a monthly basis. Tell yourself, oh, I don't want to trade more than so amount of my capital this week or this month or today. Once you understand that, it will help you to establish a maximum number of trades that you can take per day or per week. You get that? So are you getting something? Okay, Jane, welcome. Hello, welcome. So where are you watching us from? Let me know where you are connected from. Okay, so another thing about overtrading is if you don't use trading journal, there's what we call trading journal. Trading journal is it could be manual or digital. You can make it. Okay, from Botswana. Thank you. Welcome, Jane, from Botswana. All right. So now, if you don't trade using trading journal is you just having, you can have it in Excel sheet, Microsoft Excel, and say, oh, trading, you have your date, the currency pair you are trading, you have the session you are trading, you have the take profit and the stop loss. Now, in your trading journal, you record every trade. You understand? You record every trade pattern that you take on a daily basis. You record it, and at the end of the week, you do a review and say, oh, on Monday I took this trade. Why did I buy or sell this trade? Because in your trading journal, you must have reason for buying or selling. If you say USD JPY sold, why? In your trading journal, there should be why. In that, under why, you now type, oh, I saw oversold, I saw overbought. Because my trading system, everything aligned together and gave me the signal to buy or to sell. So that way, it will be guiding you and helping you to grow. Are you getting it? So that way you see that you are improving. By the time you are reviewing your trades on a weekly and monthly basis, you see improvement. Even when you lose, you know why you lose. And in a trading journal, you can also put your trading system there. If you are using moving average, you tell us if it is moving average 200 over 200 by 70 EMA, you put it there and say, oh, because 50 EMA crosses 200 EMA and gave me buy signal. That is why I bought. So that way, it will also help you to test how strong your trading pattern or trading system is. Are you getting value? Let me know if you are getting value in the comment section. Let me know. Let me see your comments. Okay, Coil is asking a question. Yeah. So what's the exact number of trades one can take in a day? It depends on your trading system, your trading style. It also depends on, there are times you might not even trade. It depends on the trade setup. And that is why I mentioned that don't be an uninformed trader. Don't trade without being informed. You must know what is happening in a day. Daily on your chart, if you are a technical analysis, and if you are a fundamental analysis or a fundamental trader, you should know what is happening globally concerning the Forex, the market, the currency that you are trading. For example, if you are trading dollar, pounds currency, which is GBP USD, if anything happened in Britain, definitely it will affect their currency. If anything happens positively and negatively, it will definitely affect the currency. Now, if there was a news that says, oh, something positive happened in the United Kingdom, and now what do you expect? You expect that currency to appreciate more than the other currency that you are trading against. You understand? So now the numbers of trade that you can take a day depends on you. It can be one trade. It depends on your trading system, your trading style, and your target that you are looking at for. So wait till the end. You will see something that will clarify your question now. Now, the other thing about over trading is when you focus on quantity. A lot of people focus on quantity instead of quality. They just want to enter the trade, pam. Oh, this one, pam, 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 pam. I want to encourage you to always focus on quality. Focus on quality trades. What do I mean by quality trades? Wait for high probability setups that align with your trading strategy. Did you get that? Coil, did you get that? I think that will answer your question. When you wait for high probability setups, it is not compulsory you are sitting watching the chart. No. You know when the setup is set based on your trading system or trading strategy. You understand? You know when the setup. So always wait for focus on quality trades. Focus on high probability trades. Go and learn about volume trading. There's what we call volume in the market. Know when there is high volume. Know when the volume is low in the market. Know each session. There's London session, there's UK session, there's Tokyo, Know Study their volume, the volume in such market, in such trading sessions. That will help you to know when to trade and when to hold on. All right, you got that. Thank you. Thank you. All right, thank you. Are you getting value for this session? If you're getting value, drop in the comment section, and also invite as many people as possible to join this session, because I know if you're getting value, you want others to learn. You want others to learn. And also, let me quickly share this with you that I am working on this program, this Forex trading mentorship for Gen Z. For Gen Z. Gen Z are those that are born between 1996 and 2012. So if you fall in between that age range, you can subscribe to this program. You can join this program because it is based on popular demand anyway, but it is also meant for those that want to learn. And I only have 12 slots because I'm doing it as a birthday gift. My birthday was 18th of September. And I say I just need 12 people, just 12 people to sign on. And you may want to ask, what's the benefit? Why should I sign on? Let me quickly run through the benefit for you so that you know why you should sign on for this program. You know why you should sign on for this program. The reason is that I want to mentor some people that are interested to join. It's not going to be free. It's not going to be free, but it's going to be very, very affordable. Number one is that it is to fast track. The benefit is fast track to financial literacy. You're going to gain essential money management skills that school doesn't teach you. You're also going to learn valuable skill sets. You are going to master Forex trading techniques that can become a lifelong income source for you. You're going to also be getting flexible learning potential. It is something that if you are interested, I'm going to post let me drop the link, the registration link in the comment section of this video so that you can go and check and watch and, look at what we have there. And then that will help you. That will help you. I am sure that will help you. So now let me drop that in the comment section, the registration link. You see there at the end of this session, you can go and register. Let me pin the message. You can register, and it's not free, but it's almost free because there's going to be a commitment fee at a very affordable price, So if you are interested and you are a Gen Z, you want me, Taiwo, I want you to mentor me. Okay, I'll be glad to do that. So you can easily go and get ready to be part of that cohort, because this is the first cohort that I'm bringing up. So I told you, focus on quality. Number one mistake is don't overtrade. The number two is that you should not trade without a trading system. The number two mistake is don't trade without a trading system. You may want to ask, what is trading system? Trading system is your trading strategy. Your trading strategy. Don't rely on signal alone, even if you are getting signal and you don't know what signal is. Somebody just sent me a signal. There are times we can be overwhelmed. We can be carried away. We can be involved in so many things that you do a wrong analysis or you can give wrong signals. And if you give wrong signals and, those that you give wrong signals have already traded and you are just realizing you just realize that, I did a mistake somewhere. Then if those that you give signal don't know much about, don't have a trading system, they will just enter the trade blindly and lose money. You understand? They will just enter and lose money. So, and that is why you must have a trading system. You must have a strategy, a trading strategy. Have your own strategy. When you have your own strategy, it will clear the rules. It will help you to do what? To clear the rules. What is the rule? Or what are the rules? Entry and exit rules. Your entry that, oh, I am entering a so price. I'm entering at this level. It has met my strategy. I should enter here. Or, oh, this place that the price has gotten into, let me exit and take my profit. Or, I entered at the wrong price. Oh, the way this market is going, I think I'm in the wrong trade. Let me exit. That is you having a clear rule about your trading system. You understand? So the number two thing that trading with a trading strategy will help you to achieve is risk management. When you have a trading system, it should have risk management strategy in your system. There should be risk management strategy in your trading system. And that, that guidelines is how much you can risk per trade. You should have that in mind. Oh, this trade that I want to go into, oh, this strategy that I'm trading with, what is the, profit to losses ratio. Don't just buy trading system. There are a lot of people that are promoting trading strategies, trading system, trading robot this, robot that, and they won't tell you all these things. They won't tell you the clear rules of entry and exit. They won't tell you about the risk that is involved per trade. They won't tell you. Then the other thing about trading strategy is that it will also help you to establish analysis method. You have a strong analysis method. Let your trading strategy should have a strong analysis method, because that way you establish a way to analyze and improve your performance. If your trading system or trading strategy does not have a way to analyze the market, there is no way you can improve your performance. So your trading strategy should include 1, clear rules, 2, risk management, 3, analysis method, 4, testing. Test your strategy on a demo account before you use it on a real account. Do what? Test your strategy on a demo account before using it on a real account. What is demo account? Demo account is free account, free money. It is something that you can use to play, to learn, but you can't withdraw your profit from it. You cannot even withdraw any money from it. You can lose it, open another one. Test your strategy as many times as possible. Test. A lot of people are buying prop firm accounts now, especially the Gen Zs. You see, one of the reasons why I'm promoting that program, that Forex trading mentorship for Gen Z. They will buy the prop firms account and look for people that will help them to win, to pass the evaluation stage, and then pay them. And when they now give them the account, they will lose that account. And the strategy behind prop firms account, it is just same demo account that you are using to demo trade that they are selling to you, but with principles and rules that, okay, do not lose more than so percent. Some will tell you 3%, 4%, don't lose more than 10%. If you can do this consistently for a period of evaluation, we will give you so amount of real money. And that has become a big issue for some people, because they are just after the money, hitting it, bang, 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 no strategy, no system, nothing. They can't analyze. They have not tested their strategy. There's no risk involved. They have not. You see, there are so many things that you just have to get right. And prop firms are springing up here and there now, making money, because a lot of people are losing prop firms accounts daily. Those guys, because it's free money. I can even do it if I want to do it. It's a demo account. They will just sell demo to you. So why can't you use a real demo, or let me say a demo to learn and leave prop firm accounts now? Once you master your trading strategy, you can now buy prop firm account, and don't buy huge amount of profit first, because someone called me the other day and said, I want to buy $100,000 account. I said, have you traded profit account before? He said, no. I said, no, don't do that. Buy $25 account. $25, I think that's $5,000. Some people buy $5,000 profit account with about $25. Some can sell $10,000 account for you for $60 or $70. Buy that. If you can manage that and you pass that evaluation stage, then and you traded that account and withdraw profit, the shared profit, once you withdraw your profit, then you can now say, oh, I invested $70 and now I'm getting $800. Let me withdraw this money. Once you withdraw, keep $500. Buy 1,000. Buy like 20,000, or buy profit that is at the range of $100 or $120. At least you have made profit. Then, as you are trading profit, put some money in real account that you'll be trading consistently. That is the strategy. Wait, so if you want to learn more about that, go and join the mentorship. If you know you are a Gen Z. Anyway, let me read some of your comments. Thanks so much for this information. Amazing. Jacob Bisong. Thank you. Jacob, where are you watching us from? Let's know where you are connected from. All right. A lot of people go for prop frames account, then go for easy signal without market knowledge. And that's why they are losing. They are losing seriously. Those prop frame, a lot of them are not operating in the US because they cannot even withstand the law, the financial laws in the United States. So a lot of them are doing it from, they are much in Dubai now. They are in Dubai, they are in Cyprus. Some of them they are running offshore that you cannot track them. So Signal, you better do something that is sustainable, because tomorrow now, anything can happen. A lot of prop firms are not even paying. That you make good money, they will not pay you, because they will tell you one thing, they will tell you one story, and that's how your money will go. I know people that have traded and made good money and they were unable to get their profit from prop firms. So don't rely on it. You can use it to make money, but as you make money, withdraw, put aside the money, invest in another real account that is not prop firms. You understand? Or use that money to also diversify into other instruments. You can trade stock, you can trade stock, you can trade ETFs, you can trade features and the likes. You understand? All right. Okay. Jacob is watching from UAE. Wow. Thank you for watching us all the way from UAE. So we have people from Botswana, from Kenya, from UAE, all over the world. Wow. Okay. So let's quickly, we have a lot to cover. So now let's look at the number 3. The number 3 mistake that you must avoid is not using stop losses. I am a victim of not using stop losses many times. You know why? See, at times we think, oh, I've done my analysis, this thing will go in my direction, and you will now see that the thing will go against you. Now, when the market goes against you, what is your fallback strategy? That is one of the reasons why stop loss is good for you. That is one of the reasons why you must use stop loss, because it is a fallback strategy. Excuse me, I need to take some water. So don't trade without stop loss. Stop loss is very, very important. It's very, very important because it acts as a safety net for you to limit your losses on each trade. It is something that you should always use, irrespective of the trade, irrespective of the time that you want to trade. Always use stop loss and set it before entry. Number 2, set your stop loss before you enter the trade. Always set a stop loss before entering a trade without exception. Not that I will come and do it later. When the profit goes, or when it goes in my favor to some level, I will trail it. There's what we call trailing stop. Trailing stop at times does not, it works when you babysit, when you sit down and trade and you are watching it and there's volatility, there's volume, a lot of volume in the market, and it moves in your favor within a short period of time, or the time that you are sitting, babysitting or baby trading the trade. And you can say, oh, I want to go out. Oh, this thing has moved in my favor like 40 50, or 50 pips. Let me trail it. Trailing means let me lock in some profit at 25 pips or 30 pips and leave 20 pips for the market to, to come to swing and do whatever it wants to do. That way, that one is good because already you've locked in 30 pips and you can go out and be watching it over your phone and whatever device that you are watching or monitoring your trade. But don't set stop loss. We don't trade without setting your stop loss. And another thing is properly place your stop loss. Place stop loss. Place stop losses. Give trades room to breathe while aligning with risk management. When the market is coming, it will give room for the market to breathe. You understand? For you. So now, when you understand that, oh, I can't joke with my stop loss, then stick to the plan. Always stick to the plan of setting stop loss. Don't always move your stop loss away just because the trade is going against you. Because there are some people, when they place a stop loss and the market is coming against them or moving against them, they'll say, oh, let me shift it, let me adjust it, and they adjust it, and the market will still go and hit the stop loss. Then why did you adjust it in the first place? Because the margin that you have adjusted, you have extended your risk. Maybe the stop loss was 20, you adjusted with 20. Instead of losing 20, you have adjusted 20 more, you are losing 40. So just stick to the plan. If you lose the trade, don't worry, you make another trade. You understand? So please always don't trade without using stop losses. Make it a plan. Make it what? A plan. Like I told you, if you have any question, I am open to your question. Drop it in the comment section. And number 4 mistake that you need to avoid is mismanaging risk. Mismanaging what? Risk. Don't mismanage your risk. A lot of people used to mismanage risk. The principle and the description is what you are looking at the table on the screen now. The principle is either trade 1% or 2% of your account. Trade. And do you know why we used to advise that? So that if there is another opportunity in another currency pair that you can use as safe haven to cover the losses from one trade, you have that opportunity. But when you exposes more percentage than your risk level, you might not be able to cover up. There's a way you can cover up losses. Yeah, there's a way. There's a way. If you know what you're doing, if you are losing on this currency pair and you don't overtrade your account, you don't overexpose your account, and there is a way you can see another trade setup in another trading currency that you can now trade to cover up the losses that you are losing on one trade. But if you overexpose your account, you won't be able to do that, and that opportunity will go. This is one of the reasons why we are saying follow 1 to 2% rule. Some people will say, oh, because I told you I've been in this business for over 20 years. I've seen people that will tell you, when do I make profit? When can I make profit? When I can increase my profit? When I can increase my lot size? When will I make money with 1 or 2% rule? Oh, let me just expose. Okay, no problem. Expose. Can you take the risk? If you can take the risk, no wala. If you can manage it, no problem. But if you cannot manage it, follow 1 to 2% rule. But if you can manage your risk very well, all well and done. Oh, good Godwin Sunday. This is one of my Forex kids. I'll be Forex children. This guy has been following me for long, almost 18 years or so now. Oh, wow. Godwin, how are you? Thank you for joining. Thank you for joining. Are you getting value for your time? Let me know in the comment section. And also, if you have a question, Drop it in the comment section. I'm going to attend to your question. Wow. We will soon wrap up. So, with managing your risk, I told you about the principle of 1 to 2% or 1 or 2%. Another principle is position sizing. Position what? Sizing. What do we mean by position sizing? Adjust your trade sizes based on account size and specific setups. It is based on your account size. You understand? Not that some people don't have trading strategy. They don't have system. They just come to the market and think, I see this opportunity. I want to increase my lot size to 2 standard, 5 standard, and you enter the thing, blow your account. Because you don't trade based on position sizing. When you understand position sizing, you know that I have to trade based on my account balance. And the next one is risk ratio reward or risk reward ratio. Always aim for potential profit, at least twice the potential losses. Twice the potential of the loss that you can. Like we used to say ratio 1 to 2. Like whatever you want to risk, the profit target should be times 2 of that. You understand? If you want to risk 20 pips per trade, target 40 pips. If you want to lose 40 pips per trade, target 80 pips. That's a simple strategy. That's a simple analogy. Did you get it? Thank you. All right. Godwin, God bless you. Thank you. Oh, Ugo, Oji, just joining. Where are you joining us from? Thank you for joining. You can watch the replay. We'll soon wrap up. We started about almost an hour ago. No, it's not up to an hour. I think 52 minutes. Yes, ago. 52 minutes away. So now, number 5 mistake that you have to take note of is being undercapitalized. That is one of the problems that we have in Africa. We don't have access to a lot of, and that is the strategy that prop firms are banking on, or that is the weaknesses that prop firms are banking on. They know that a lot of Africans or African countries are undercapitalized, so they would always look for strategy to present to you so that they can take your money. You know how much Forex brokers are making out of Nigeria? I have a lot of mentees who are country directors of brokerage firms in Nigeria. Some of them used to tell me how much they are making in a month. They take out millions of dollars from Nigeria on a monthly basis, and those money government are not even making. They are not collecting taxes from them. Or more, this our country is easier to make money. Okay, Ugo from Lagos, thank you. Okay, Abimaje Aduojo, thank you. Where are you joining from? Welcome. You joined late. You watch the replay. If you have any question, I'll soon wrap up. Drop your question. So now you have to look at that. Being undercapitalized is something that is also affecting a lot of people. So if you are undercapitalized, like I told you earlier, don't jump into prop firms with big money. Start small and be consistent. The strategy behind the prop firm is consistency. They want to see your consistency. That's why you see during the evaluation stage, they have one that is 1 step. They have one that is 2 step. And they also have different packages that is some. They will tell you, you have to be consistent. The price of consistency is different from the one that you just want to be trading anyhow. You understand? All right. So now, when you are, if you know that you are undercapitalized, then start wisely. Start what? Wisely. Begin with an amount you can afford to lose. Don't say. See, I've seen people that committed suicide because of Forex trading before. So when I'm telling you, I told you I've been in this game for over 20 years. I've heard stories of people that committed suicide. So you have to be careful. So start wisely. Don't start with all your life savings. Start with something that you know if you lose, it will not affect you. And then you also have something that will help you to generate more money. That's why as you are making money from Forex, don't put everything in Forex. Look for other portfolios to build and diversify. If you're in Nigeria, even from Nigeria, you can trade the New York Stock Exchange. You can trade New York stock market. You can also be doing, put small in cryptos. You can also put some of those money in federal government savings bonds. You can buy treasury bills in Nigeria. You can also buy commercial papers. There's what we call commercial papers that big companies sells in Nigeria, like MTN, all this, even Dangote, all these big multinationals. They sell. The way to raise money. Most of them don't come to the stock market or to raise capital. They sell commercial notes or commercial paper. That way, that one you can be getting like 18 or 20% in a year, or within 3 months, 9 months. And that way you can even put in 1 million. And you can imagine 1 million, just separate 1 million. $1 million is less than, 1 million naira is less than $1,000. It's around, let's say 800. It's not 700 or something, 800. Once you make that, go and convert it to naira, put it in one of those instruments. And on a quarterly basis or yearly basis, you are collecting your returns. You know that is safe. Don't be unwise that you go and put all your money. Boom. No, that's not the best way. All right. So you also need to have realistic expectations. A lot of us want to make all the money in the market. We expect unrealistic returns from a small account. There was a day a bishop called me and said, oh, his wife is trading Forex. I said, who taught her? Yeah, he said he went to one of these brokers training, Forex brokerage firm in Nigeria. They will be organizing training. A lot of them are into training business and use that to bring you into setting up account with them. They will train you for 1 day over the weekend. Some it is 1 day or 2 day seminar, and they will say, come and open account. They know you will lose the account. No follow-up, no mentorship, nothing. You understand? So I say, and they gave her some money to be trading. I said, okay. I said, how much is the money? He said $200 or $300, and they want to raise it to like $100,000. I said, what? I said, okay. I said, that is impossible. But because, I don't want him to feel as if I don't have faith because he's a bishop, I'm a pastor. I said, no problem. So one day he just called me again and said the wife lost the whole money. I said, really? You see, these are the challenges we have. Unrealistic expectations. And the third one is that part-time approach. Consider trading part-time while building your account and your skills. We don't want to do it part-time. A lot of people, when they get signal, they will become financial advisor. They will become financial expert and be collecting money from others and be trading full-time, and they will lose the money. No, don't do that. Don't do that. See Forex trading as seed investing. There's what we call seed investing. You know what seed investing is? It's like you have a seed that you want to plant. Is it the day you plant a seed that it grows and germinates? No. It has a period of germination. It has a period that you will harvest your seed, the fruit of the seed. That is the way you should see Forex. See it as a seed that you are planting. And there's a time. And that time of planting, you are learning, you are improving, increasing your knowledge, you are improving your knowledge, your skills, you are learning, you are improving yourself. And see, free things cannot help you. You know how much I've invested in Forex? You know how many products, courses I've bought? So please, always look for and get people that you can be brainstorming together. This is one of the reasons of the program I told you about, this Gen Z Forex trading mentorship for Gen Z. It is not meant for everybody. If you fall into that category of those that were born in the year 1996 to 2012, sign up. I'm seeing some people that are beyond that age and they are still signing up. I don't know what to do to those people now. I don't know what to do. I don't know what to do. So if you are interested, sign up, because we only need 12 people. Already we have 10 people. So I'm looking at if we can extend, give more room for people to join, but it's not going to be free, but it's going to be very, very affordable. You will know how much you will pay during the onboarding stage, because after we have collated the name, you will have a session on Zoom with me. It's going to be a live session. You tell me your experiences, your goals, then I will know if we should admit you into this cohort and tell you how much it will cost you. But it's very, very affordable anyway. So the link is on the link is there, is on the I've pinned the link on this comment on this live session, so you can check it out and then you can sign up. So now let's quickly move on. We'll soon wrap up. It's 1 hour already. So let's look at the recap. The recap of the mistakes to avoid. Number 1, overtrading, no stop losses, no strategy, poor risk management. These are the recap, and you must avoid excessive trading to focus on quality setups. Always use stop losses to protect your capital. Develop and stick to a well-defined trading strategy, and implement proper risk management techniques. All these are part of the things I'll be sharing with the trading, Forex trading mentorship with Gen Z, and lots more. So if you are interested, the link has been pinned. You can go there and sign up for now. Sign up. It's not free, but no payment to sign up. Once you sign up, you get the full details. So in conclusion, avoid common pitfalls. By avoiding these mistakes, you are setting yourself up for potential success. Also, continuous learning. Invest in continuous learning. Forex trading isn't easy. It is not easy. Come and ask me. But it can be rewarding with the right approach. Also, share your experience. Share your what? Your experience. Comment below with your own tips or experience in the Forex trading section. In this live section, let me know your experience. Let me read one of the comments I'm seeing now. You say, "Sir, I have problem with my trading. I have a good trading strategy, but I am not patient enough to always wait for my setups. How can I improve that, please? That is why we did this live session." So if you are this, I believe you started earlier with us. So all these things I shared with you, go and watch the replay. And if you don't still get it, if you fall in between the age of Gen Z, sign up for my program, and I will create time to ask more questions and then know if you are fit in for the mentorship program. This is one of the problems that we have. In the industry. It's something that a lot of people are going through, and some people don't have people that they can share it with. They can't share their experience with some people because it is easier to share your winnings than your losses. When you win, you can easily come and say, "Oh, I made so amount of money." But when you lose, you will be in isolation. You don't want people to know, and you'll be struggling, with it alone. That is why I told you that Forex can be emotional. It can deal with your emotions. So understand that and know how to get rid of all these things. And that is one of the reasons why I also told you, join that the Forex trading mentorship program for Gen Z, and you will never regret you did, because the prices are very affordable. I hardly promote programs when I'm doing live sessions, but this one, in fact, I only have two slots left. So if you are lucky to fall into the 2 slots, fine. All right. So Jacob, please follow all these things that I shared with you guys. And like I told you, do not overtrade. Don't trade without stop loss. Maintain risk management. Then about your you are not patient enough. Then you need You see, you need psychological help. What you need is more of psychological to work on your emotional intelligence. You see, Forex trading also has, like I told you, the emotional aspect of it can be draining. Then you need emotional intelligence strategy. If you don't have it, you might have the best trading strategy or trading system and you will keep losing. I pray God will help you. Thank you. Thank you. All right. Such a brief insight session. Thanks for the information. Please, if you have not subscribed to my channel, I want you to please hit the subscribe button now, because we'll be doing more of Forex trading, stock trading features very, very shortly. This is the first Forex session on this channel, and I promise to be doing more of it because I can see the engagement and I see that a lot of people by popular demand are asking for it. And even those that I expect to join, I didn't see them here. Some people that their children are trading Forex without the proper foundation. They don't have the right knowledge and now they are losing. See, if you are an adult here or you have a child that is trading Forex and he doesn't have the right financial education, he will lose. And you are putting that child at risk. A child that does not have a proper financial education that is trading Forex can mess up his or her future, because already you've exposed him or her to risk of the beauty of dollar, of spending money, of making dollar. So he or she will be looking for all means to make money, and he can go any length to get the money. So these are part of the things I'll be teaching in the Forex trading mentorship from Gen Z, is to reorientate you, have a mind shift to the right path so that you can build a career and build a future. I pray God will help you. God will help you. Okay, there's another question here. Ugo is asking, is saying something. Let me see your comment. Oh, you have been trading for some times. Making profit is not much of a problem, but most of the time you end up losing the money back to the market. What can I do? The same thing that I've been saying. Yes, you are making money is not your problem, but sustaining the profit is the problem. Please, if you fall into the age range of Gen Z, go and sign up for my mentorship program. When you click, it's a Google form. We don't ask you to pay for now. Once you sign in, there's going to be a time, after we'll do the collation, we'll get back to you, let you know when we are onboarding, and then we will know if you qualify during the onboarding session. Because even if you don't fall in between that age, because I see some people that are over the age of Gen Z that they are signing up, and I was like, wow, okay, no problem. We'll create another program for such people. However, if you are losing and you are making profit but you can't sustain it, then work on your trading strategy. There's something that you need to work on. That is your trading strategy, Ugo. Let me quickly help you here. What you need in that case is two things. It is either you don't overtrade, number one, or make that profit, make some, withdraw some of those profits, because that's another problem that a lot of people are facing. They have never make a withdrawal from their Forex account. They only had money. A lot of people used to fund, they don't make withdrawals. So what you do is tweak your strategy to, okay, if I make so amount of money, I'm making a withdrawal from this profit. Once you make that withdrawal, you know that is for you. You can't lose that. No matter how little the profit is, even if it is $10, hey, $10 in Nigeria now is about 16,000 naira. You can imagine you are withdrawing $10 on a let's say weekly. You are withdrawing $10, and in a month you are withdrawing $40. You know how much that is? That's about 30. That's 60,000 naira. Some people, some teachers in Nigeria don't get 60,000 as their salary. So tweak your strategy. Learn to be smart by withdrawing from your profit. So if you lose, you are not losing everything. I hope that helps you. So on this note, I'd like us to shut down now. I have to go and do something. This is all right. Okay, so if you have more questions, drop it. I will respond because we can still access the live chat after this session. We can access the live chat, or you can get in touch through email or WhatsApp. However, subscribe. If you have not subscribed to this channel, subscribe, hit the subscribe button, and you will be glad you did. So on this note, let's call it a day, and do have a wonderful, 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 wonderful evening. Bye-bye.